I just came out with my first quarter letter, what I call my 2022 outlook. And in that, I raised my equity market targets. I had been at 5,300 for the S&P, 18,000 for the NASDAQ, 42,000 for the Dow, and 2,900 for the Russell 2000. And those were all aggressive targets that most people questioned. And, people were coming closer to them, but I was pretty much the high on the street. And I did my work at the end of the year. And the more I looked, the more I said, those targets are just not high enough. When I say melt up, people quote the term melt up a lot, but very few people really understand the concept of a melt up. We've only had a few of them in history in the equity markets, 1929, maybe the Nifty 50 in 1973, certainly the NASDAQ in 2000, but not very many others. It's not just a big rally. It is something really to behold. And when I took a look at a lot of cross markets and a lot of underlying stuff in the equity markets, I came away saying I'm just not, my targets are not aggressive enough. I raised my targets in this letter that came out last week to S&P 6,000, NASDAQ 20,000, Dow Jones Industrial Average 45,000, and the Russell 3,000. Now, those may sound insane. In most cases, I think they're 30 to 40% away from where we're at. And I'm also saying we could get there in 3 to 6 months' time, depending on when it gets started and how fast it really gets going. But parabolic melt up is really what I'm talking. And parabolic, when you step away and look at a longer chart, we've had a parabolic melt up since March 2020. But the last stage is going to be the steepest of all. So it's going to be almost a vertical move where, momentum begets more momentum. People feel the train's leaving the station and have to get on. And it's not going to come just from psychology, although that plays a big role. It's also going to be a very viable argument. People are going to look and have, for one reason or another, going to have confidence that this thing has legs and could go on for years. It's not going to be somebody jumping in because I think the next 2 or 3 months is good. This is going to be people across the spectrum, institutional investors and retail investors, getting very bullish for reasons that I can guess at. I obviously don't know. If I were guessing, I would say the likelihood is that the tightening that's going on, we're all, and it's been going on for many months, everybody's been speculating about Fed tightening. And when Powell had his spoke in late November and early December, he basically capitulated and said, this inflation has legs. It's not just transitory, and we have to deal with it. We need to, nip it in the bud. We're gonna speed up our taper, and we're probably gonna tighten in 2022. That was a big change, and that began the move in interest rates, where you've seen, the 10-year go from 135 to 180, basically. And I think it's on its way to 210 before it pauses. That's a big move in a short time. And what I learned way back in the 1980s is the power of the bond market, or what we used to call the bond vigilantes, in terms of them doing the tightening and not needing the Fed. If the rates are being pushed higher by the bond market, the tightening's already happening. Everybody's focused on when's the Fed going to hike rates? How many rate hikes are we going to see in 2022? To me, that's not the important thing. It's all happening right in front of you. It's happening. The tightening is already occurring. And I think the likelihood is that as we move through the first quarter, the narrative is going to shift from, the Fed's going to hike 3 times or 4 times. The narrative is going to shift to maybe the Fed's not going to hike. The reality is that the rate move will have already taken place. And if that's the shift, all of a sudden you've gotten out of the way something that's been in the way for most of the last certainly 6 or 9 months of everybody fearful of when's the cycle going to end? When's the Fed going to start tightening? I was one of the earliest ones talking about Fed policy mistake that would lead to a bust. And now everybody's worried about that. So I think if the reality is, or the narrative shifts from Fed tightening's just around the corner to, hey, the tightening's already occurred, you're going to have the wind at your back again. And I think coinciding with that very well could be a sense that, and again, I'm talking about narrative, not necessarily reality, but a sense that for at least the next several months, that the worst of COVID is behind us, that Omicron is kind of the weakening variant that you see as a virus starts to dissipate, and that we've learned to deal with that. And you get away from this constant counting of constant testing and counting of cases and hospitalization, and that it starts to feel like normalcy is creeping back into our society, into our economies around not just in the US, but around the world. If there's a feeling that COVID's being put behind us, that will be a huge wind at the back of the markets. So I think it's a combination of, maybe the narrative changing on Fed tightening and narrative moving towards COVID is no longer, going to shut us down. Those two things may be the impetus for the melt up. Could I be wrong? Maybe it's something else, possibly. But my work, just when I look across the board, it just says, yes, we got to get this correction out of the way. But once it's correction out of the way, there's another leg up that's going to be the biggest leg yet. I think if you step back in history, at any of our major tops in history, and this can be not just U.S. Look at the Japanese top in 1989. Look at the Chinese top that we had prior to the last couple of years. But certainly in the U.S., look at any of our major tops. And at tops, you have the highest bullishness that you have. At bottoms, you have the lowest bullishness that you have, or the highest bearishness. And so in between, we're not at a top or a bottom here. We're in between. We're on our way to a top, and we have corrections along the way. So you do correct along the way, and that's really what's kept me bullish, and why people keep saying, why do you keep raising your targets? You had a target of 4,000, then a target of 4,500, then a target of 5,000, then 5,300. Now you're saying 6,000, and I always raise them well in advance of when we get there. So I'm not playing good till we get there and then I'll raise it. I'm seeing things as I go along, and I adjust my targets for that. So what's kept me bullish has been the amazing skepticism, what I call the wall of worry, that has continued to remain as we've climbed up here. It starts to dissipate, and then you get a little pullback and people get bearish again. Then it goes to higher highs, and then starts to roll over, and you get, as for a long time, I don't remember what it was, a year or more, we didn't even have a 5% pullback, but the 3 or 4% pullbacks were enough because people got skeptical very quickly. And I think, again, we're having a correction here. The Nasdaq's corrected 10%, the Dow and S&P, only a few percent. But we are seeing people start coming out of the woodwork saying the top's in, we've seen the highs, we're going a lot lower, the bull market's over. So you are getting some of that sentiment coming back in here. And really only a few weeks ago, I was one being lectured that I was missing my own melt up, that this thing was off to the races. And I stuck to my guns and said, no, I think we're still in a correction. There's a lot of stuff underneath the surface that tells me, there's divergences, et cetera, that tell me this thing has more correcting to do. And that this recent rally is a year-end rally, that it doesn't have legs. And now we're seeing that. So yeah, it's kind of a long answer to your question, but yes, I think at the end, when we see, if I'm right, we see 6,000 on the S&P, you will see more bullishness in the sentiment numbers than we've seen at any time, even at the top in 2007. So I think we are moving in that direction, but there's still plenty of skepticism out there. So it's there's going to be a lot of people having to get on the bullish bandwagon. Yeah, I'm fully anticipating that when we finally get to the top, people are going to be lecturing me about how I'm missing it by turning bearish, that you don't understand. This thing has years to go. That's what I fully expect at the top.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where do you start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.